On October 8, 2025, global markets were rocked by a headline no one expected. Japan ditches dollar, embraces yuan. For decades, Japan had been America's most reliable financial ally, the largest foreign holder of U.S. debt. This wasn't just a policy shift, it was a rupture in the post-war financial order. The U.S. dollar's supremacy, long taken for granted, was suddenly in question. In Tokyo, officials confirmed Japan would begin selling off its U.S. Treasury holdings and had struck a currency swap deal with China. The two Asian giants would now trade directly in yen and yuan, bypassing the dollar. Wall Street panicked. The Dow plunged over 1,000 points. The dollar's value tumbled, especially against the yuan. Analysts scrambled to explain how America's quiet partner had just upended the global system. In Washington, the White House was silent, but the shock was palpable. The U.S.-Japan alliance, a Pacific cornerstone for 70 years, was suddenly uncertain. This was about more than money. It was about trust, loyalty, and shifting power. Japan's message was clear: it would no longer tie its fate solely to the U.S. The era of unquestioned American leadership was facing its greatest test, from its closest friend. The world's financial plates had shifted, and a new era was dawning from the East. The old order had vanished in a single morning. The global balance of power would never be the same. Japan's plan was precise and deliberate. Instead of dumping its trillion-dollar U.S. bond holdings overnight, Japan announced a gradual, multi-year sell-off. The goal: minimize panic, protect its own economy, and quietly reduce exposure to the dollar. Proceeds from the sales would fund a new sovereign wealth fund, invest in infrastructure, and diversify reserves into euros and yuan. The Bank of Japan began selling through international channels, but the scale couldn't stay hidden. Each sale nudged U.S. borrowing costs higher, forcing the Federal Reserve to intervene. This was financial chess. Japan retreating, the U.S. scrambling to contain the fallout. The psychological blow was immense. If Japan could exit, why not others? U.S. Treasuries, once the world's safest asset, now looked vulnerable. Other major holders, China, Middle Eastern oil states, took notice. Japan had shown that a careful exit was possible, providing a blueprint for others. The move shattered the myth of dollar invincibility. The global financial system was suddenly open to new possibilities. Japan's methodical approach made the unthinkable real. The world was watching and learning. Japan's decision was rooted in decades of economic struggle. Stagnation, deflation, and a towering debt-to-GDP ratio had become the norm. The old model, export-driven, tied to a single superpower, was unsustainable. Demographics made things worse: an aging population, shrinking workforce, and soaring social costs. Holding low-yield U.S. bonds no longer made sense. Japan's industrial base was squeezed by China and South Korea, while American policies felt increasingly unreliable. Years of U.S. deficits, inflation, and dollar weaponization eroded trust. Japanese leaders saw their savings propping up American consumption, while Tokyo bore the risks. The pivot to the yuan was a vote of no confidence, a declaration that Japan would chart its own course. It was a necessary break from a system that no longer served Japan's future. The U.S.-Japan alliance, once ironclad, was shaken to its core. In Washington, Japan's move felt like betrayal. In Tokyo, it was overdue independence. Japanese leaders were tired of being junior partners, their interests sidelined by America's rivalry with China. Japan needed a foreign policy that balanced both giants, not just followed Washington's lead. The financial pivot was leverage, reducing U.S. influence and asserting economic sovereignty. The message: security ties could no longer be taken for granted if economic interests weren't respected. U.S. officials now faced a Japan that would weigh every request against its own interests. The era of automatic alignment was over. Both sides had to confront new realities. Allies are not vassals, and global policies have consequences. Japan was stepping into a riskier, multipolar world, no longer sheltered, but more self-reliant. The future of the alliance and Asia's security was now uncertain. Japan's pivot was about survival and strategy. Energy security was paramount for the resource-poor nation. Tokyo struck long-term energy deals with Russia, defying Western pressure, and paid in yen, yuan, and rubles, not dollars. This challenged the petrodollar system and secured vital resources on Japan's terms. Even more transformative was the currency swap with China, creating a dollar-free trade zone between two economic giants. Hundreds of billions in trade now bypassed the dollar, insulating both nations from U.S. sanctions and volatility. Japan was building new partnerships based on geography and necessity, not just old alliances. By trading in local currencies and securing energy outside the dollar system, Japan was helping construct an alternative financial order. No longer a passive player, Japan was now an architect of a new Asian-centric system, its priority resilience and prosperity, not deference to the old order. The US dollar's global dominance has been America's greatest advantage. Oil, trade, and debt priced in dollars forced the world to hold US currency, giving America cheap credit and unrivaled power. Japan's systematic sell-off struck at the heart of this privilege. Confidence in US debt wavered, interest rates rose, the Federal Reserve was forced to buy its own bonds. The exorbitant privilege now looked like a liability. Other nations, China, Saudi Arabia, watched closely, considering their own exits. Japan's gradual approach offered a roadmap for a coordinated, less disruptive retreat from the dollar. The risk of a domino effect loomed. As alternatives emerged, America's ability to use the dollar as a tool of foreign policy weakened. Financial sanctions lost their sting as new systems took shape. Japan's move was about more than finance. It was about shifting the rules of global power. The world was no longer bound to a single currency's fate. The dollar's era of unquestioned supremacy was under siege. Japan's bold move marked the dawn of a multipolar era. The age of uncontested American dominance was over. Middle powers like Japan were forging new partnerships, maximizing autonomy, and building webs of resilience. The BRICS bloc and other coalitions accelerated efforts to create alternatives to the Western-led system. Japan's pivot gave these projects credibility. Even US allies saw the need for change. Asia's rise was now undeniable, with Japan anchoring itself in a new regional sphere. This was an abandonment of the West, but a rebalancing toward geographic and economic reality. Power was diffusing, alliances were shifting, and national interest was back at the center. The Tokyo shockwave of 2025 was just the beginning, a dramatic opening to a new, uncertain global chapter. The world's future would be shaped by many hands, not just one.